Guys, I want to welcome you back to my channel, and in this video we're going to talk about where to place your stop loss. Okay, before we jump in the video, if you guys will hit that like and subscribe button, also hit those notifications, that way you guys can be notified whenever we drop new videos like this. Okay, so let's jump into it. So now, one of the biggest questions that a lot of traders always have and have a misconception of is where to actually place your stop loss. So your stop loss should actually be placed under the protected high or the protected low of whatever time frame you're trading under. So let me explain what I'm talking about. Let's say if we were in a downtrend, and let's say we were on the 4-hour time frame, okay? And let's say we had a break of structure. Let's say we had a break of structure in this area right here. Okay. BOS. And we know that price has to give us a pullback. And whenever we're looking for a pullback, we want to see price pull back to 50% or greater within our Fibonacci. And so when price pulls back, we're looking for it to hit some demand zone, some supply zone, order block, or something, you know, in this particular area. So let's say price bounces off of this area here. So at this point, because let's just say you're on the 4-hour time frame, your protected high, your protected low will be on the 4-hour time frame. So for example, if you take an entry here, your stop loss will be under this area here. Okay. So let's say if you're trading the 4-hour time frame, you get a break of structure in this area. And once you get a break of structure, you decide to drop to the 15-minute. And let's just say on the 15-minute time frame, let's remove this here. Let's say on the 15-minute time frame, you see the market, let's see. Okay, here. Let's say you get a break of structure on the 4-hour time frame, but then you drop to the 15-minute, and on a 15-minute, you start to see, you know, a down structure on the 15-minute, but you get a break of structure in this area, and you start to get a pullback 50% of this particular area here. So let's just say we have a break of structure here, and your Fibonacci tool is being utilized to notate where 50% is. Let's just say you take an entry somewhere in this area. Let's say you get a demand zone in this area here. Let's say you get a demand zone here. So because we're trading the 15-minute, we took a break of structure and we're looking for entries from the 15-minute, your protected low will be this area here. So whenever you take your entry, instead of your stop loss being up under this area here, your stop loss will actually be under the 15-minute protected low. Okay, and then where's your TP? Your TP could be in two places. Your TP can be here, targeting the 15-minute liquidity high, or your TP can be in this area here, targeting the 4-hour liquidity high here. Okay, now here's one of the things that you guys have to understand though. There is a certain point where you actually want to start moving your stop loss to entry. Now, what would that point be? So if you were trading, let's say we were trading the 4-hour overall, okay? One of the things that you can do, let's say if you took an entry somewhere here on the 4-hour time frame and you were trading the 4-hour, your stop loss will be under the protected low of the 4-hour. However, let's say you drop down to the 15-minute and you see this pattern here gives you a break of structure and it starts to move to the upside. When price breaks this point here, this is the point in which you can actually move your stop loss into entry. As soon as price breaks this area here, from here, move your stop loss into entry. Now we're in a risk-free trade, okay? From there, this is your ultimate target. And what you can do, once you get a pullback in this area here, you can actually, you depend on how you trade. If this is 50% within your trade, you can start taking partial profits, or you can take your stop loss. You can put your stop loss right under this swing low here. You can take partial profits and let the rest ride up to this area right here, because this is the liquidity area that you're targeting. Because on a 4-hour time frame, we got that break of structure and it came back into this area. Okay, so stop losses go under the protected low or the protected high on the time frame that you're trading on. Okay, so let's actually go to the charts and actually look at this on the live charts. Okay. All right, you guys, so check it out. So currently right now we're on G-Chef, okay? So as you can see with G-Chef, we're on the 4-hour time frame. Well, let's go ahead and go to the daily and kind of see what we're looking at, okay? So on the daily time frame, we can see we had a high, lower low. This area here, it was a lower high, lower low. But in this area, we had a break of structure. But this break of structure actually gave us an impulse to a new low. So whenever we see something like that, you guys, what we can do, we can just notate it like this. This is a lower high, lower low, lower high, lower low. We can look at the big move because this is our last structural point. This is our last high. This is our last low, okay? Because it broke the previous low, okay? So now, we can see that this gave us a lower low, and so we're due for a pullback. Okay, so let's go ahead and drop to the 4-hour time frame and see what we have. So if we drop to the 4-hour time frame, we notice that in this area we have a low, lower high, lower low, lower high. And hold on, before we do that, let's see if these are equal lows here. Okay, so these are equal lows, but this low is still lower. So this is our last valid lower high here. Okay, so this is our 4-hour structural point, which we can see now we have a 4-hour break of structure in this area here. Okay, so now what are we looking for? Let's say if we drop down to the 15-minute or so. So if we were on the 15-minute, this area is in confluence with the 15-minute as well. So let's just say we're looking at price and we use our Fibonacci tool. Okay, we're using our Fibonacci tool. But before we do that, let's go back to the 4-minute and see what we're looking at as far as a demand zone. So if we come here, this is our last down candle before the up move here. Okay, so let's just say this is our demand zone here. Go ahead and remove our Fibonacci tool. So one of the things that we'll be looking for, if price came down to our demand zone here, let's say on a 4-hour time frame, we saw something like this. Price came down, it gave us a break of structure on the 4-hour, and then it gave us a pullback. Okay, so on a 4-hour time frame, if we're trading the 4-hour time frame and we take an entry here, this is our protected low right here. Okay, from there, where's our TP? Right here, the liquidity high in this area right here. Okay, however, let's say if we were looking at price here And we were trading the 15-minute time frame, just like we talked about in the previous example. We're trading a 15-minute. We get a break of structure on the 15 and a pullback. Our protected low is right here. We're looking for entries in this area here. TP1 can be that area. Stop loss under a protected low. Ultimate TP would be here. Okay? When price breaks this point here, when price breaks this area here, we can start moving our stop loss to entry. Once it gets 50% within your trade, we can start taking partial profits. So let's just say if this was 50%, we can start taking partial profits and we can let the trade just ride on up to the upside. Okay. Hey, you guys, I hope this was informative for you. So in order to recap, you want to make sure that you put your stop loss under the protected high or the protected low of the time frame in which you're trading under. So if you're taking entries on the 1 minute, you get your break of structure, it's coming back into that supply or demand zone. You want to put your stop loss under the protected low or high on the 1 minute. If you're on the 15 minute, you do the same. Each and every time frame that you're trading on, that's exactly what you'll do. Protected highs, protected lows. Okay? Hey, I'll see you guys on the next video.